BlackBerry continues to roll out those new products. They had the Z10, now the Q10. So lots of launches coming up with BlackBerry. BlackBerry, of course, also has now talked about the A10 that could come out in November. It's supposed to be a highly powered, highly spec'd phone, but we'll have to wait and see. We haven't heard too much more on the A10. We're also hearing news of the BBM, and that would be basically BlackBerry as an app available on someone else's phone. So that could get BlackBerry out of their own devices. And then, in addition to that, well, there's talk about BlackBerry going into cars, so that there would be a BlackBerry feature within a car. So there is so much product information happening with BlackBerry, but the earnings coming out on June 28th could affect the trading, and also, boy, are those shorts building. The short position now in the stock is 170 million shares. 33% of the outstanding stock is being shorted. So how is that affecting the stock price and the trading? Well, I'm joined by Spiro. He is a chief market technician at Orips. So when we look at this stock and how it's trading, it was going up pretty well. We had a nice uptrend, and then just recently it started to pull back.
Right, well, correct. There was an uptrend. Started in September 2012. There was a positive trend, and we moved up as high as I think around the 1830 area in this past January. There was a break of that uptrend in February, and since then we've gone into a neutral or sideways trend over the past several months. So the thing is, volume throughout this sideways trend has been tapering off or declining, and that suggests a healthy consolidation that could potentially continue the previous uptrend. Right now, indicators are a little bit mixed. The weekly indicators are positive, the daily indicators are negative, so this could take a little bit more time. But what we're seeing is prices are coming down to several support levels, support area that lies between 12 and 1330. So aggressive portfolios could nibble a little bit as prices come into this support area, using $12 as their line in the sand. $12 happens to be, by the way, where the 200-day moving average is, the 200-day simple moving average is right now. So use that level as your line in the sand. And then eventually, if prices start to turn higher, we have, portfolios could add to those positions, and a breakout above the 1830 level, that January high, would be a really significant event that could lead to much higher prices.
All right, well, as you mentioned, you said aggressive, people, because again, I said the earnings are coming out on June 28th. If they are well received by the market, well, we could see that positive move because the shorts would have to cover. And if they're disappointed, if say the Z10 sales, now we're only going to get a month's worth of Z10 sales. If those Z10 sales are disappointing, then we could have that fall.
Correct. So the short position, obviously, that's building, the short interest could lead to a short squeeze if there's a positive catalyst. But again, $12 line in the sand. That's why aggressive portfolios could start to nibble. If there's a break below that $12 area, investors would want to consider reducing positions.
And if you're a conservative BlackBerry investor?
It's up to you, but you might want to wait for the price action to start proving that there's actually something there. So you might want to see prices start to turn up a little bit before starting to get involved.
All right, well, there you go. Take a look at the charts on BlackBerry, because right now, as Zeb's saying, the volume has started to pull back a little bit on the trading for BlackBerry, but certainly not the news, because we are getting lots of news out of BlackBerry and all their products. That was Zeb Spiro, and I'm Deborah Borchardt with The Street.